Hello and welcome to our channel, Invest Blade with Kenny. Here we talk about investment and education and opportunities that may not be readily available to others that are not aware. Just a bit of a background. I started Broad Success Company more than 15, 20 years ago. And under Broad Success Company, we have the publishing arm with several books published. We have the training arm, training in different organizations. And then we have the investment arm, which is InvestBlade Investment Advisors. And this is where we now go on to build out the different aspects of our services. So this channel is majorly to drive the investment education and then letting you know what is available to you wherever you are in the world. And by God's grace, we've had clients in more than 15 countries in the world, and then we're going further from there. I just want to tell you that today is day one of 31 days on investment education. I want to tell you three personalities that you should not have when you're talking about investment. And what is investment? Investment in its rudimentary form is keeping money away in different vehicles so that your money can earn more money. Remember, it's your money earning more money, not you getting other jobs. So let's assume you have three jobs and you're making three different incomes. That doesn't make you an investor unless you take the money you have earned to invest. Somebody says, I believe in saving more than investment. Well, I need to tell you that everywhere you're saving your money, so let's assume you keep your money in a bank or keep it in other platforms, and then they say, you know what, you can get 15% of your money annually. That sounds good, doesn't it? But the truth is, everyone that saves money in places like that, like the bank uses your money to do other forms of investment. They get returns, maybe 100%, 300%, 400%, depending, because they have more access and more knowledge. And then they're able to pay you your 15%. And then in some very funny cases, your 3%. So this is all about investment. We're going to talk about different investment platforms, whether investing in stock, investing in real estate, startup investing, and some other things like that. But let's talk about three personalities that will not help your investment journey. The first is the kind of people that want to put some money in an investment vehicle and want returns in a short period of time. I'm going to be focusing largely on the stock market. And so let's say you have $100, regardless of what that is in your country, whether you're in Africa or Europe, wherever. And you say, you know what, this is November. I want to put this $100 into this company and then get my returns before December 31st. Well, that's a good idea, but it's not going to be a great idea because many times when you invest like that, you are always under pressure. You are not able to predict what will happen. For example, between now and December, Iran and Israel could happen. Ukraine and Ukraine and Russia could happen. North Korea is joining that battle now. Different things could happen depending on who becomes the president of the United States of America, whether Kamala Harris or Donald Trump. All these things could happen in the short term, and that could cause a bit of a challenge as to what will happen to this your short term. Research has shown that if you're going to get the best from investing in the stock market, you want to invest in at least 20 to 25 stocks. And sorry about that break. Research has shown that you want to invest in about 20 to 25 stocks and you want to keep them for at least 5 years. So that gives you a sort of a timeline as to what will happen. So when we say 20 to 25 stocks, some may do well, some may just perform averagely, but many times your big hitters may not be more than five. One stock could bring 600%, while another one brings 10%. So all these things, you put them together to see that, hey, you shouldn't be the person investing for a short period of time. That's the first kind of personality that doesn't serve you well when we're talking about investing, particularly in the stock market. The second kind of personality are the people that at the slightest smell of blood, they run away. That's figuratively speaking. So let's assume you invested this figurative $100, and then in 1 month, 2 months, it goes down 50%. You hear many people say, I lost money in the stock market. Never again. I'm never, see, stocks, I don't, well, Yes and no. Yes, because, well, that's money lost on your app or whatever you're using to monitor that investment. But no, because those are paper losses. Can I repeat? Those are paper losses, losses on paper that you have not yet bagged as a loss. So what does that mean? So let's assume you invest in a particular stock and it goes down 50%. Nothing has happened unless you sell that stock. If you don't sell it, it's just a paper loss, and something could happen. They could go into a merger. They could come up with a new product, and that could change all of a sudden. Do you understand? Or they could have a very good quarter, and then things explode from there. So these are things that we need you to know. So when your investment drops 20%, 50%, are you scared? Do you begin to have a heart attack? Do you begin to, if you're like that, then maybe investing in the stock market and some of these other platforms may not be the best for you. Because investment many times is not about what you know, it's about your behavior. That is your mindset in approaching these things. Some other person says, you know what? I've lost $2,000, but there's no problem because I know my investment thesis. I know this company, they're building new factories in Japan, in Portugal, in Spain. So they're spending a lot of money. But when those factories begin to bring the yield, the stock will kick back up. So that's the beautiful thing about having a good timeline and then not being scared at any primary losses or paper losses, if you may. Now, let's talk about the third kind of personality that you shouldn't be. That's those people that use money that they need for other obligations to invest in the stock market. So let's assume you have school fees coming in February or late January. You shouldn't use that money to invest in the stock market. Very, very important. You shouldn't use such money to invest in the stock market. I tell people over and over again, if you need this money, you want to, maybe you're looking for proof of funds, you want to travel, you want to build a new house, you want to pay for a mortgage, you want to talk about tax at the end of the tax season, depending on what country you are, this is not the kind of money you should invest in the stock market. Because when you need that money, for example, let's use school fees, tuition fees, when you need that money, so let's say you need that money between January 31st and February 7th, that's a space of 7 days, 8 days. Anything could be in the works by that time. I talked about regional conflicts. Some other things could happen. There could be, for example, there's a stock recently that the share price just fell because their accounting team, the company that does their accounting resigned. So that brings a lot of questions, and you don't want to be caught up in such a thing when you need your money back. So if you need this money for paying mortgage, for building a house, for buying a new car, taking your wife on holidays, that is not the money to invest in the stock market. Don't forget, if you're going to highlight one of the major things I've said today, the best performing investors invest in at between 15 to 25 stocks, and they keep their money there for about 5 years. So these are very important things to note. I don't know if that has helped you. We're on WhatsApp, and the channel is InvestBlade TV. That's a single word, InvestBlade TV with Kenny. We're also on YouTube, InvestBlade TV with Kenny. We're also on Instagram, InvestBlade TV with Kenny. Twitter is also going to come up in a few days from now. So I want you to follow us on all our platforms. Very good investment knowledge coming up, and I hope to see you in the next one. So this is day 1 of 31 investment education on your channel, InvestBlade TV with Kenny. Take care of yourself.